When you sit back and you see the market all-time highs, and you think about the fact that we're just running unsustainable and overwhelming government levels of government debt, where we have persistent inflation that just won't go away, and we've got a really nasty yield curve that typically ends in a recession historically. So we have to stop and ask ourselves: is the market sustainable at this point, or is it on a sugar high? Let's find out. My name is Brian Cannon. Welcome to Markets in 5. Let's jump into the S&P 500 to determine if we're on a sugar high or not. I would say that if you look at this chart just right off the bat, RSI is telling you, yeah, it's extended, it's overbought, and we should expect either a sideways consolidation or a pullback. I mean, obviously, it doesn't tell us to what degree the pullback might be. But if you look at price, you can tell that it certainly has been extended from this kind of up channel trend that we're in. It's kind of broken out of that, which could be a good sign, or it may pull back down and into this range. And then if you look at the price movement since the lows of October of last year through now, it's up almost 38%. So pretty impressive run in a fairly short period of time. So I would say that more than likely it's time for a little pullback. All right, so if we take a look at the S&P 500 on a weekly basis versus a daily basis, it tends to smooth out some of the bumps in the market here, but it does tell a story. So right now you can see that the stock price is at all-time highs. However, we're experiencing a very slight negative divergence on RSI. So even though the stock price is up, the RSI is having a slightly lower high. It's very, very indistinguishable, but it is there. And again, MACD looks good. Get out of the way here. Right here, everything looks good. So again, it's not necessarily a screaming sell. It's just kind of more of maybe a canary in the coal mine of just be a little bit cautious with everything extended and everything overbought. And so if you look at historical periods on the weekly that experience that kind of same situation. So back in 2018, you had a higher stock price, but you had a lower RSI reading. So again, it was losing momentum, and then it proceeded to fall down to a lesser degree, but still a negative divergence here in 2020. You had a slight negative divergence before the big pull down from the coronavirus in 2022 as well. So it's not uncommon to have a negative divergence prior to a pull down, and when you have overbought readings like this, it's just kind of a canary in the coal mine you need to be a little cautious of. So if we look at the seasonality of the S&P 500, you can see that September and October are very, very difficult months, primarily September, from a historical standpoint. And you can see that July actually is pretty good. So we want to be in the market while it's expected to do well, and then just very cautious of some of these overbought technical indicators that we're watching as we enter a couple of slow months of the year. So it's hard to look at the market and not think Nvidia this year. They've had an impressive run that literally I feel like they've put the S&P 500 on their back and run up the hill. So they've carried everything forward. So is it on a sugar high? Is it overbought? And I would say absolutely it is. And that's not necessarily a red flag in and of itself. A stock can stay overbought for a period of time, but we want to start looking for clues within that indicator to determine, are we at more of a peak, or is there more opportunity in the upside? And I would say that at this point, it would tell me that we're more at a peak than we are not. And simply because the stock price is at all-time highs. However, we're experiencing a lower high in the RSI, the Relative Strength Performance Index, considering its run of literally over 1,200% since the lows of October. Yes, 1,200%. That's crazy. It's due for a pause. It needs to be pulled back. It can't run at this level and this trajectory for long. MACD is still positive and looking good and sloping up. However, we are starting to bump up against kind of some resistance areas. So coiling up a little bit. That again, we want to just make sure this thing doesn't roll over and drop down. Now, the last clue that says we're probably on a sugar high, especially as it relates to Nvidia, is this most recent increase in the stock price came as the volume was dropping. So that's generally a canary in the coal mine as well. So between the volume dropping, the negative divergence on the RSI, and the stock price literally at 1,200% since October, it's probably a sugar high. And wrapping up, I think it's important to note that the market always climbs a wall of worry. So that's not ever going to change. There's always going to be something looming that's a reason as to why the market shouldn't be going up. So, I think right now, we're going to have a little pause is my guess. So we're watching things very closely. But I do think it's going to resolve itself to the upside and end up, in hindsight, being a buying opportunity. So, we'll keep our eye on it. But if you have any questions, give me a shout, and I look forward to seeing you on the next Markets in 5.